Alrighty, we are live. Welcome to the Option Genius Show for February 27, 2026. Today we're going to be talking about the markets, the updates, but I do have a special segment on stocks that are great to buy for AI-proof growth. This particular industry sector is doing really well right now, and the prognosis is really good for continued growth. So we're going to be talking about that, and we'll talk about everything else that's going on with the markets as well. And give me one second here. Hey, how you guys doing? Welcome, welcome. Michael saying, okay, GDX hit an all-time high today. Yes, it did. Did it? Oh man, GDX. Let me see. GDX. Yes, it did. 115.74. Right now it's at 115. Um, the miners are doing really well. They came back from the little sluggish point and they're actually doing better than gold. Well, gold today is up 1.4. GDX is up 1.09. I was looking at NGUT Nugget, thinking about, okay, should I get in or not? But yeah, GDX looks really good. How you doing, David? What's going on? Matt is not with me today. Matt is off, so he is taking a break. So it's just me, and I am Alan, and we're going to be talking about the markets. And just a little disclosure, everything here is for education and entertainment purposes only, but I don't dance, and I usually don't sing. So you're lucky on that regard. Uh, but yeah, so trading is risky. You can lose money. Be careful with what you do. Common sense. Talk to your financial advisor. Talk to your spouse. Talk to your dog. I don't know, but be careful. All right. So markets today down across the board. SPX down zero point 0.7. RUT down 2%. The SPX is actually down 0.7%. RUT is down 2%. Dollar is down a little bit. The Nasdaq down 0.5%. Dow is down over 1%. Gold and the metals are up, as well as VIX. The VIX is up 10% today. It's up over 20. And oil volatility is up 7% today, which is up over 64, which is very elevated. Very, very elevated. We don't see the VIX usually this high, or the oil volatility, the OVX, the oil VIX, because it's very short term. So I was thinking about looking at that. So we can talk about that as well, about a trade there. But the oil is up 3% at 67. So that is based on the news. So let's talk about that one first. The Iran talks yesterday are over. They're going to be talking again next week. But this week they had no resolution. They talked, they had some issues, and they decided, okay, let's talk again next week. I guess they ran out of time. But again, Trump has given them, I think, a 10-day deadline. And so now I don't know what happens to that deadline because now they're going to be talking again next week. So is he going to bomb them while they're still scheduled to talk? Who knows? But based on that, in oil, we have probably a $10 to $12 premium in the price. So if we did not have Iran stuff going on right now, we would probably be sitting at about $55 a barrel. But because of this Iran issue, we're at 67. Now, OPEC Plus also indicated that they want to pump more oil. They want to pump over $100,000 barrels a day more than they're pumping right now. Even though there is uh, not a shortage, but there is somewhat of a storage glut. Like there's more barrels going into storage than is being used. So storage is increasing, so prices should be going down. But because of the Iran thing, Iran is the third largest producer of oil in OPEC Plus. And so if anything happens to their production, it's going to be um, pretty bad for oil prices. I mean, they're going to go straight up. Now, Saudi has said that we will match or be able to offset production losses up to a certain amount, but they can't replace all of Iran's production. I don't think the US will shut down all of their production, probably not even most of it, but Iran might retaliate by doing something. So I don't know what's going to happen there. Nobody really knows. And I think it's just a wait and see moment. And so based on that, you have the oil volatility up at 64 today, the OVX. So, I mean, normally that's a great time to sell options because when you look at volatility up so much, it doesn't stay up that much. And so if you look at a chart, right, the last really big high we had was 74 back in June, and it was there for one day. It was up to 74.41, and then the next day it came back down to 66, and then the next day it came back down, or 2 days later it came back down to 53. So it usually does not stay, maybe a week at most. And so you have a brief period of time to be selling options, but now the question is, what do we do in this situation? What options do we sell? Um, if you could be selling puts, okay, but if there's a peace treaty, then oil's going to drop $10. If there's a war, oil's going to go up $10. So do you sell calls? Do you sell puts? I don't know. And so the trick is to get in before the volatility goes up. But that doesn't always happen, right? So if you're playing on a consistent basis, if you're selling month options month after month after month, then you might be in a better situation. But right now, I have my puts on, and let's see how many days left. We have 18 days left to expiration. And so my puts are doing great. I have some 53 puts with 18 days left. So, I thought about going into the next month, going into the future month with has like about 48 days and looking at what I can sell there. But again, prices are elevated. They are juicy. Premiums are really juicy. But yeah, I didn't really like it. So I haven't done anything. I haven't pulled the plug yet or pulled the string to put the trade on. David saying he's got an option on oil at 95. And even though it's far away, it's making me nervous. Yeah. So, I mean, 95, you probably are safe for now. Even if there is a strike, I don't think there's going to be an all-out war. If there's a strike, there might be like, you know, like some missiles flying or something. Again, this is just guessing, right? We don't know what the actual plan is, but I don't think Trump wants to get into something that is going to be prolonged. And he's actually said that multiple times. So let's say we're looking right now at $67 a barrel. If we go up maybe $15, that would be excessive. That would be a pretty large move. So I think the 95 might be safe. You know, but we'll see. So you got 18 days. Yeah, I probably, stick to the rules of the trading system and you're getting close to expiration anyway, so you're probably thinking about taking it off. And so I don't know. I don't know. What is that? What is that even worth? 95. Let's see. The 95 strike calls. Come on. 18 days out. Only or oh man, they're still actually worth a lot. They're still worth 44 cents. So that's $440 on each one. Yeah, that's still a lot of premium. That's a lot of premium. And they're still at a 7 delta. So that's so I mean the option market is telling us that there is a chance that oil goes up. It might not get to 95, but there is a chance it gets to in the 80s. It's the 70s for sure. Not sure, but if something happens, we'll get into the 70s. If something happens, that's what's predicated on, right? So if something happens, we're going to get into the 70s. We might get into the 80s. Hopefully, we don't get into the 90s. That is going to send shockwaves across the economy. Depends on how long it stays there. But and even on the flip side, if you're thinking about buying options, that's another risk too, right? You could buy options, but then that's all predicated on if something happens. We don't know. So, yep, margin definitely has increased, right? Margin has increased because the volatility has gone up. So, keep an eye on that. The other thing I wanted to talk about was Netflix. Netflix is up today 13%. Okay, so here is a trade. Um, that we've talked about because I've owned a bunch of Netflix and I owned it all the way down. Um, I was selling puts on Netflix and then they decided to make a bid for Warner Brothers and the stock started tanking. And I probably should have pulled the plug and gotten out, but I did not. I got assigned on my shares and it continued to go drop and drop and drop and drop. And they decided, I'm thinking, okay, what do I do? What do I do? What's the situation? What's going on here? Why is this thing dropping? And it was dropping because of the takeover bid, right? They were buying Warner Brothers for a certain amount. And so money is coming out of Netflix to go buy this other company. That's why the shares were going down. Now, if they bought Warner Brothers and the deal concluded, then it probably would have been fine. And the stock might have not have gone drop so much. It might have stabilized and then maybe risen as time goes on. But as you know, as it works out, Paramount decided to also put a bid in for Warner Brothers, and they started having a war. So like, who's going to pay more? And that's, I think, what really sent Netflix prices down because they're going to have to pay more and more and more as they continue to fight and it's like a two-party auction for this company. And so I think that's what really sent prices down. They did say that they were going to reach some kind of decision, the Warner Brothers group, that who they're going to go with in March. So that was my time frame. It's like, okay, I'm going to hold on till March. Hopefully it doesn't it doesn't pain doesn't go that bad. But just yesterday, Paramount upped their bid and Netflix decided to back out. And they said, okay, you can have it. We give up. And because of that, now Netflix is up 13%. So what do we do in this situation? If you're not in Netflix, if you are in Netflix, you hold on, right? If you are not in Netflix, you have a potential for a really good trade here because nothing is different with this company. They just had earnings recently and their earnings were really good. They're like, hey, we have more subscribers, we're making more money, advertising is going good, all this stuff is happening. But the stock kept dropping because of this proxy war. Now this proxy war is gone. And so the trade is back. I mean, the stock should be back to where it should be. And where it should be was somewhere around the 120 level when it stopped dropping, when it pretty much started to drop. And so even if you go back to the 115 level, right, we're only at 95. So the 200-day moving average is about 110. That is my price target on this. So, 95 to 110, that's another 15 bucks. That's more than like almost more than 15%, maybe close to 20% upside from here. I think we get there very quickly. So this might be a trade that you pull the trigger on and it might actually do really well. You don't get a chance like this very often, you know, where a stock is artificially pushed down for one reason, that reason goes away, and then like a rubber band, and it pops back up again and goes in the opposite direction, and it gets back to status quo, right? We're not looking for a big growth story here. We're just looking for it to get back to where it was before, where it should be. And so based on that, I think we have probably another 15 bucks in this. So that might be a trade that you can take a look at. It's definitely probably not going back down to the 75 level where it was a few days ago, like 3 or 4 days ago. And so put spreads on this would probably work, even though it's not the perfect setup. Negi puts would work on this as well. Buying calls might be the best option, or I have some stock. I'm definitely not selling covered calls on my stock because I don't know. It might get to 110. It might even go further. It might overcorrect, right? So it might go 120. I don't know. I'm still going to ride it higher until it stops and then it tells me what it wants to do. So just buckle up, ride higher, and then let's see where it stops trading. And at that point, I will probably maybe sell some in the money calls and get call assigned and have the call stock called away. Because this was not supposed to be a long-term position, but it turned into like a few month position. So we'll see how that works. Um, so we talked about Iran, we talked about Netflix. Markets are down today because the inflation numbers came out. The wholesale price index, the PPI, which is what wholesalers pay. Those prices have gone up. We were expecting a little bit of an increase. We got a much bigger increase than expected. And so that really puts a damper on any rate increases until the new Fed chair in June. And so that kind of sent the markets down today. Not much, S&P is down 0.8%. The rut is more sensitive to interest rates, and so that's why it's down more. Um, but still, markets are still pretty much flat for the year. So not they're going up. They find reasons to go up, then they find reasons to go down. So nothing really happening much in the market overall. It's just being, we're going sideways. Iron condors probably would be, would have worked really well in this environment. Um, but even if you'd just been on puts, or even if you'd just been in calls, you would have been fine too. But what really is working, metals are back in vogue. Um, Michael said GDX is at an all-time high. That would be an awesome trade. It's still going higher. Gold, if you take a look at it, is going higher. Platinum, silver, all of them are going back to where they were. And so that is a trade that continues to work. The dollar continues to get weaker, and the State of the Union did not really change anything. So that's going to continue to work. Now, I did want to talk about a sector that has been doing very, very well and is going to continue to do well. Now, on the show, we do talk about the AI revolution or the AI apocalypse, whatever you want to call it, that is coming for people's jobs. Economy does seem to be slowing down. I just talked to my a friend who's a therapist, and she was saying that a lot of her patients are having issues, mental issues, because the business is slowing down. People are getting laid off. Square, which is Block now, I think, Block or Square, um, they just laid off half of their workforce. They are a credit card processing company. They laid off half of their workforce, about 4,000 people, because they said, "Hey, we're just going to let AI do it. We're just going to let AI do it." And then they're going to lay off another half of their workforce. So they're going to be down to 25% of their workforce. Now, can you imagine if every country or every company um, laid off 75% of their white collar workforce? I mean, that would be insane. That would be incredible. That would be unbelievable. That would be the biggest depression that we've ever had in this country. That's coming. I don't know if it's going to be that bad, but there is already things, signs posting like, hey, this is coming. So, question for David is, what do you think about petroleum and other fuels? Petroleum, I don't really focus on petroleum. I don't really look at it. Natural gas to me is scary. We are heading into summer, right? It's getting warm. Where I'm at, the high is supposed to be 87. Right now it's 85, which is almost a an all-time high in temperature. So, nat gas. I know we had a lot of snow last week in certain parts of the country, so nat gas might have gone up. Let's take a look. I'll take a look at UNG, which is the nat gas ETF, but yeah, that's really low. It's almost at a 52-week low. So I'm not sure. I thought nat gas was up higher than that. Let's see. If I can see. Uh, if I can find the futures contract. What is the futures contract for natural gas? Oh, here we go. NG. That makes sense. NG. Yeah, it's 2.8. It did jump up to 7. Wow, recently. But it has since come back down. So if you take a look at the chart of NG, which is backslash NG in the natural gas futures, I mean, you see that back in the 16th or so, it was trading at $3 a BTU, I think they call it. And then it jumped up to 7 within a few days. And then it came back down to 330. And so I'm not really sure what happened. I don't follow it that much. But nat gas is known as the widowmaker because it can go crazy. And right now it's almost at a 52-week low. So I'm not seeing the same thing there as we are seeing in oil. So uh, So David says he was looking at Oxy. Yeah, so all of the names in the petroleum or the oil space, right, are doing well. The gas space. Valero's doing well. Halliburton, Schlumberger, all of them are doing well. Oxy is 52-week high just a couple days ago. Probably is going to continue to go higher. They do well when oil is up, but these guys are also doing well because oil has passed a certain level, right? So when you get into the 60s, $60 barrel, these guys do really well. If we drop back into the 50s, um, then it'll be different. The exploration companies like Valero would probably still do well. The refiners, like actually Valero's a refiner, so they're still going to be doing well. But the Exxons and the Chevrons and whatnot, the Oxys will probably also drop if oil does come back down, right? Because now every dollar that goes up in oil price is just extra profit for these companies, the oil companies. But the refiners, a little bit different. Their costs go up, and so they can pass it on through higher gasoline prices. So they should be okay too. But yeah, so I mean, they're all based on oil prices. So Oxy, I don't know. I think the worst is in for oil, for actually for these guys. Like it's I don't think we're going up much higher. There is what I'm saying. Um, if it is, it's going to be temporary and then it'll come back down. So, oil, these companies, they'll probably continue to do well. I don't know how much higher they're going to go though. They were very underrated in terms of people owning them, and a lot of people have, they're selling the AI names. And where are they going? They've gone into these names, they've gone into discretionary, they've gone into consumer names. So those have all gotten a bid, and so we'll see what happens. But I wouldn't expect, mm, 100% returns or anything from this sector this year. All right. So I got a little bit off track here. So we were talking about a particular sector that is AI proof, right? Because AI is coming. It's going to make a lot of changes, but there are certain areas, certain pockets of the markets that will not be affected as much. And AI is going to come first for white collar, and then the robots are going to come for everybody else. So we'll see how that is, but that's a little bit further off coming down the pipeline, right? And so what the sector that I'm talking about is actually the broad sector is REITs, which are real estate investment trusts, and then the subsector is healthcare REITs. And so they've been doing really well. Some of the names I can share with you that have done amazingly well. There's one called Diversified Healthcare, DHC. That one's up about 148% in a year. Another one is really good is American Healthcare, AHR. That one's up about 93%. That one I owned last year and just rode it higher and higher. While everything was going up and down, this thing just every day, slowly, 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 just moved higher and higher and higher. There's a couple others here. Care Trust, CTRE. Well Tower, I like that one. Well, WELL. Omega Healthcare, OHI, Ventress, VTR, and Sabra, SBRA are some other names. My favorites in these were American Healthcare and Welltower, AHR and WELL. Uh, you know, you can look at their charts and it's basically from the bottom left to the top right and they're just moving higher. And I think they will continue to do well. So if you're looking for, hey, I'm looking for a long-term company that's going to continue to increase, continue to do well, and not get blindsided by AI, this is the perfect, I think right now, the perfect sector. So these are number one, they're defensive, right? Even if we go into a recession, which we might, if we go into a depression, which we might, you still need healthcare. And these companies are different from other healthcare because they're only, I mean, other REITs. These REITs are different from other REITs because they're only healthcare related. So we're talking about hospitals, we're talking about medical office space, senior housing, skilled nursing. Um, and so even in a slowdown, people are still going to be sick. People are still going to get hurt. People are still going to be old. And so these are going to do well. Then we have the population, right? And I'm talking long term. I'm not talking about like Jay just, for a couple months. I think these will do well for several years in a sense because the population who is 80 plus continues to grow. More and more people are getting old. Stuff is coming down the pipeline that is going to keep us alive even longer. And people are going to be hitting 100, 110, 120 plus. And so these guys are going to be very high demand. And the demand for beds and medical space is already premium demand is already out there. So it's only going to increase. Then the add in the new construction, which is at a record low. So they're not building more of these right now. Demand is going up, but because of higher interest rates and whatnot, they're not making more things. Right? After COVID, prices of everything construction went up. Right now, with the immigration roundups, that has pushed demand for labor up, and construction prices have gone up. Construction times have gone up. It's taking longer to build stuff, and so there's nothing being built. There's not that much. So that leads to stronger rent and pricing power for these companies. Then you also have balance sheet changes. So in COVID, a lot of these companies, they got hurt. They got hurt really bad. They had bad publicity. They lost a lot of patients. Um, and so they cleaned up their balance sheets. Kind of like the oil companies, right? They spent a lot of time to get rid of bad properties, to clean up their debt, to refinance whatever they could. And so now these companies are leaner, meaner, and stronger than they have been in the past. And so they have the capacity now to buy if there's any distressed property or, you know, anybody that if they have a competitor that is stuck, they can actually come and buy them out and grow that way because there's not a lot of new construction anyway. So they're better off in that sense. Um, and then the stock themselves are going higher, right? You can see it. So prices have gone up. They have lower equity costs in terms of the PE ratios in the past. Now that has been going up. So they're not as cheap as they were before. A lot of them, like I said, they've doubled in the past year. They're going to continue to move up. And they're probably going to start giving out dividends or increase their dividends. So that will attract a different type of investor, right? A more passive investor that just wants to buy and hold. So you have a mix of aging population, um, healthcare spending that continues to rise. You have constrained supply, and you have cleaner balance sheets. So that makes all of these companies look, I mean, not all of them, not everybody cleaned up their balance sheets, right? But the industry as a whole is going to rise. So if you want to look at an ETF, I'm not sure if there's an ETF that does just healthcare REITs. There probably is. I haven't been able to find it. But I looked at, American Healthcare. I looked at Well. I also looked at Omega, which is ONI. No, sorry, OHI. And then Care Trust also looked good, CTRE. So I gave you some other names as well. Take a look at those to see, hey, maybe these are something that you want to invest in if you have some retirement capital or whatnot. And if you just like, hey, the markets are too crazy, I just want to buy something that just continues to go up slowly, slowly, slowly. These have been working, and I think they're going to continue to work well. So that is the healthcare sector. Now, I looked at other REITs, right? And those have not performed the same. They are doing well now. Like I looked at symbol O, which is Realty Income. They do a lot of commercial properties. And so they're sitting close to a 52-week high. But if you look at their chart, they were fine. I mean, pretty much steady all year long. And then now recently they have moved up. I think part of it is because they are very interest rate sensitive. And so, with the thinking that Trump's guy is going to lower rates in the Fed in June, the stock is starting to rise. And that one is not the only one. There are other commercial REITs that are also acting the same. So their stocks look the same. Now, those type of properties, they do pay very healthy dividends. And so, if you're a dividend holder, it's a good thing to hold on to. And now the stock is even doing well. So I think or Realty Income is selling right now with the higher price in the stock. I think it's paying off like a 5% dividend. So, which is pretty safe. I think, it was higher because the stock was lower, but now with the price appreciation, it's somewhere around 5%. So that is what I thought about these. So these REITs are pretty cool. If you're looking for something for the retirement account, you could buy some of this and put it in there. I think it'll work. I think it's AI proof. And I think that's what I'm looking for now. If I'm looking for companies to invest in now, say, how is AI not going to affect this stuff? Like I have my wife's uncle, he works for a medical chain, St. Luke's, which is, they have clinics and they have hospitals and whatnot. And he's a nurse, right? So it's going to be really hard for even a robot to replace what he does. There's still going to be a demand for it. Now, if they do bring in robots, then these companies will make even more money. So it'll be good for AI. Now, or AI will be good. Robotics will be good for these companies because they'll make even more money because they won't have to pay people so much. So these companies will continue to go up, but they will not be replaced by AI. Like a lot of these software companies, IBM took a nosedive a couple days ago just because they thought that, oh, one of the AI companies is going to be able to put IBM out of business because their software. They replace their software. There was an article I was reading. This one lady, she recently started a company, a startup that had to do with ads. They were managing ads for people, and then two of the AI companies came out with an update that put her out of business like overnight. Like they said, "Oh, hey, yeah, we have this new add-in for our AI tool that people can now manage their ads." And so people, like all of our customers, were like, we'll just use the free tool, right? Why are we paying you all this money?" And so her company totally just nosedived, whoop, and then she had to pivot to something else. So that's happening across the board. So we'll see what happens there. Um, as we see, as I'm talking here, S&P continues to dip a little bit. Now we're down zero point 0.8. So let's see here. What's the market power number? Market power number is 0.82. So I don't know if we're going to have a market power signal today. We did have one yesterday, and then the signal went away later on the day. So it was a good day for a double dip trade. It was an awesome double dip trade. Today, though, I don't know if we're going to get the signal. So we'll see what happens. Um, it continues to move lower, but it looks like it's kind of stuck here at around 68.50. So with an hour and a half left to the close. Hopefully we get one for market power trade tomorrow, but we'll see what happens. All right. Let me see here. Where are you guys? All right. Okay, so we got a couple comments. Okay, so we got some comments about the healthcare. All right, so is the profit coming off the back of the poor? Is that why these healthcare REITs are doing so well? Um, I think I don't know about the backs of the poor. I know they do take Medicaid, they take Medicare, so they are getting paid by the government, right? They are getting paid by private healthcare. Um, these are REITs that control or they own the real estate space, right? So they might own nursing homes or they might own the building that the whole hospital is in. They're not running the building, but they own the building. They own medical offices where doctors are, right? So they're not the doctors themselves, but they own the buildings where the doctors have their offices. So that's what I'm saying is like that need is going to always be there. And so these companies should still continue to do well. And then Mary says, how can you say that when our whole entire healthcare industry is being blown apart? I find it interesting that you see it as a profit center. Well, it is doing well, right? the entire healthcare industry is being blown apart. I'm not sure what you mean by that. If you can chime in and let me know. But uh, I do agree with you in the sense that the healthcare industry is nuts. It doesn't work, right? It's very expensive. It's overly expensive. Um, Good healthcare is hard to find. The doctors are overworked. It takes too long to see a doctor, a specialist, especially, and you know it's insane. I agree with you that the industry is definitely needs to be redone. I don't know how. I don't know how they're going to do that. Um, but that's a whole different topic. We're talking about what's working. And right now, owning these medical buildings as a REIT, these REITs are doing well and they're making money. So all the things that I laid out, right? People are getting older. They're going to need more healthcare. They're going to need more visits to the doctor in the hospital, and there are going to be more people in nursing homes. That's just the nature. That's just demographics. And so the companies that provide that service will be building more buildings, or they will need more space. And then these companies provide that. And some of them probably even run the nursing homes and the centers. So they'll have that, but they try to keep a distance, right? So some of them actually own the buildings and do not provide services. Some of them actually do provide some of the services, but they're not like hospital and really health uh, focused, if that's what I mean. Um, Michael says we did get a signal earlier, and he's in a double dip now. We have a signal? Because I didn't get the indicator on I didn't get the notification on my phone, so it must not have stayed very long. I see that it did hit a low. Um, at like 6:42, 6:43, and then it popped back up again a couple of minutes later. So it was down for like 3 minutes. So you caught it, Michael. Um, you must have been watching it. But yeah, so that's awesome because that trade's going to work beautifully. So yeah, it's double dip to the win. Double dip for the win. I love it. Um, I wasn't able to get into the one yesterday because we were on live. We had the high profit or high probability profit live all day yesterday, so I wasn't able to get into that one. But several people did, and it worked sweet, really sweet. Um, and so, uh, yeah, so it was there. I guess it was. That's probably where it was. Now the indicator itself to get a notification on your on the mobile app, right? We have it set so the indicator has to stay green for I think it's like 4 minutes or 5 minutes or 3 minutes or something. There is some criteria that we have, like a buffer, because we don't want it to like hit one and then go down to zero point 0.9 and then hit one and go down and it just, it doesn't, we want it to stay and be green for a little while before we tell everybody, hey, look, there's a signal going out. So that's probably what happened. They didn't stay long enough. But yeah, great way to, if you're paying attention, man, you nailed it. It's awesome. Um, and then David's asking, is that why Bitcoin is struggling too? The AI math. Um, Bitcoin, I believe, is a whole different game. I think right now with Bitcoin, I think it's a whole different game. And this is my theory on this. I believe that Wall Street is playing with Bitcoin and they're playing with MicroStrategy or strategy, whatever it's called. They want to put them out of business. That's what they're playing. So they're shorting Bitcoin. The lower Bitcoin goes, the more problems that MicroStrategy has, and he is the biggest holder of Bitcoin. And so if this, Bitcoin prices go low enough, he's going to eventually have to start selling Bitcoin. And when he starts selling Bitcoin, that's going to lead to a whoosh downward in pricing, and then it'll stabilize and then it will, if he goes bankrupt, then, it'll go down while he's liquidated and then the price will go back up again. So I think that's kind of what they're aiming for. There's, it's it might not be like they got together in a room and they decided this is what we're going to do, but that's the trade they all have put on. Now, I do know that these larger hedge fund managers, they do get together. They're all in New York, so they do have dinners, they have conferences, they have black tie events where they sit together and talk and hang out and they know each other. They go to lunch and whatnot. So, um, it's probably not concerned, like a whole complicated effort where they got together and they decided something. But if one or two people are in on it, then everybody wants to pile on, kind of thing. So I think that is why Bitcoin is down, and I think that's why Bitcoin cannot get ahead of itself because there's concerted effort pushing it down. We'll see. It's been in the 60s. Today it's at 65,000. It's trying to get above 70, but it can't. And it was trying to go below 60, but there was some bullish buying on the downside. So there are some whales that are buying Bitcoin. Now, these are not Wall Street. These are individual people who made a lot of money on Bitcoin when it was cheaper, and they had it now, and then they're trading in and out. So um, Bitcoin has made several people billionaires that are still playing in Bitcoin. So they might be buying it up, so it's getting pushed around. Who's going to win? I don't know, but they're really Bitcoin should be tracking with gold. It's supposed to be digital gold. It's supposed to be a currency. So if the dollar gets weaker, Bitcoin's supposed to go up, right? It's supposed to match gold or be close to it because it's supposed to be a defensive thing. It's supposed to help you out when currencies are not strong or currencies are getting weaker, but it is not doing that. So it is kind of broken in that sense. So it's being manipulated. We don't know exactly by who. We have an idea. We have an idea why. We don't know when it's going to end, and we don't know what the end result will be. So it could take some time, maybe a couple of years till we see a resolution. Um, and I think me personally, I think that's why Bitcoin is where it's at. So I have some. I haven't sold it. I don't think I'm going to be buying more until we see some kind of resolution to this tug of war. And I feel that Wall Street will probably win and Bitcoin will see a lot lower price before everything, whoever needs to sell, sells, and then the price will rally from there. So we'll see what happens. Okay. Anybody else? We had some good comments today. Thank you guys for the Thank you guys for talking to me. Matt's not here. I need somebody to talk to. So keep talking, keep posting questions. Let me know. Let me know what's going on. What are you guys doing? But yeah, so that's kind of where we're at today. Markets are still, yeah, S&P is going point 0.9. We're getting closer to a market power day. So we'll keep an eye on that. And that's kind of all I had for today. So we will be back on Wednesday. Those of you who are in the club, we're starting the Credit Spread Mastery live class on Tuesday. This is a class where we are going to be trading live together during the market, and we're going to be selling credit spreads, and we're going to have you master credit spreads in 2 months. So exactly how we trade, exactly what we're looking at, exactly all of our indicators, all of our chart patterns, asking questions, small group, and it's going to be really, really cool. We do it once a year, and so this time it starts on Tuesday. If you guys, anybody out there trades credit spreads, this is the uh, awesomest way to learn, right? It's like, hey, this guy, he trades hundreds of thousands of dollars of credit spreads every month. Let's learn from him, right? Which is me, right? Me and Matt will be tag teaming on the classes, and so you'll see exactly. You'll see in our trading account. You'll be like, okay, how is he? What button is he pushing? How is he getting filled? How is he looking for trades? How is he managing trades? What is he thinking about? There are certain sectors I stay away from. I'll tell you exactly which ones. There are certain patterns I look for in the stocks. I'll tell you exactly. And so that is starting Tuesday at 1, and it's going to be pretty cool. So David says he'll be there. Awesome, David. We'll see you then. And for everybody else, if you are not in the club, you want to join, it's optiongenius.com/club. You can join right away. The class is free. It's included in the club. So you join the club, you get a membership for a year. The class is 2 months. You get that, plus you get everything else that's in the club, which is there's a ton of stuff in there. It's really underpriced. Um, so that is starting, and yep. that's all we had today. So thank you guys. And um, if you haven't subscribed, please do so. Subscribe to the channel, hit the like button, leave a comment, let us know how we're doing. And we'll see you all on the next Option Genius show, which is on next Wednesday. All righty. Take care. Have a great weekend. And trade with the odds in your favor.